Welcome back to the Armchair Trader podcast. And today we have an exciting guest, actually, one who's been on before. That's Dan Blondal, who is CEO of Nano One, a company we've been following now for almost a year. And we think it's actually quite an exciting opportunity in the alternative energy area, which is something we've been concentrating a lot this year. So welcome, Dan, to the show.
Oh, thanks very much. Great to be here again.
I thought we'd just start off for the benefit of those people who haven't heard the earlier podcast. Can you give us a quick rundown on Nano One, what it is, what you guys are up to?
So Nano One, we're a publicly traded company based in Vancouver in Western Canada, listed on the Venture Exchange, the TSXV. And we are a technology company focused on industrial technology for the production of cathode materials that are used in lithium-ion batteries. Now, a cathode material is really just a powder that gets incorporated into a battery, but it is the cathode material is the material that allows you to store energy inside the lithium-ion battery on one of the electrodes. And it's the most complicated of the materials. It bears the largest burden of cost inside a lithium-ion battery, and it's comprised of raw materials like lithium, nickel, manganese, cobalt, and they're made into a composite ceramic crystalline powder that effectively it looks like coffee grounds when we're done with it, before it goes off to be assembled into a battery. But essentially, each one of the grains of powder there are these small little crystals that allow lithium to go in and out as you charge and discharge the battery. Really, what our core is to develop technology to make these powders, and to do it to improve the performance of the materials. And we have technology that improves, let's say, the durability, makes it last longer. You get more charge and discharge cycles out of it. And at the same time, we're very focused on cost reductions and simplification of the supply chain. So we have ways of using sources of lithium, nickel, and manganese and cobalt that others aren't using, which can bring better sort of environmental stewardship to the process, to help eliminate some of the extra steps in the supply chain, which helps drive down cost and complexity. So that's maybe a very high-level overview of the company. And as a technology company, we are focused on licensing. So we're developing the patents, the intellectual property, the know-how, the people for license and partnership with large chemical companies or mining companies or even sort of electric vehicle kind of OEM companies. So we have relationships across the supply chain to support all of that.
So you effectively have this proprietary technology, and you're working with a lot of different international partners. I know Volkswagen is one of these, and you've protected that IP with patents, and then basically other companies are working with you to leverage this technology in the different areas that they're focusing on as they try and develop more efficient battery solutions.
Absolutely, and we work across the supply chain really for different purposes. We're working certainly with the Volkswagens and the OEMs, the final end user of a battery, because we're trying to create demand for our technology and for the materials we can make with our technology. But then we're also working with the chemical producers and, let's say, the miners and sort of the top end of the supply chain where everything comes from. We're working with them really to fulfill that demand. And so in both cases, we're working at both ends of the supply chain, trying to create the demand and fulfillment. And that's a big part of our strategy. And of course, we're protecting all of that with patents, as you say. And we have 16 of them so far issued in China and Japan, Korea, Taiwan, Canada, the US. The European ones take a little bit longer, but they should be out pretty soon. And we've got a couple dozen, at least 3 dozen more patents that are currently being prosecuted in various jurisdictions around the world right now. So a very big part of our sort of business strategy is to protect all that with intellectual property patents and such.
I mean, when we first started covering Nano One, it was a bit of an educational experience for us, because we didn't realize just how important the actual technology of what goes into a battery is, and how many companies that are vastly bigger than you guys are spending a lot of time and money and effort trying to make batteries more efficient. And I guess one of the areas that for an individual investor to understand is something like an iPhone where you find that you keep recharging your phone, and I'm finding this with my iPhone now. Every time you recharge it now, it seems that it's not quite as efficient as it was before, and that there's a gradual degrading of the battery. And when you scale that up to something like, for example, a car, where the most expensive component of the next generation electric vehicle is the battery, the amount of time you're going to be able to keep using that car effectively is going to become a serious question for the auto industry, isn't it?
Yeah, so one of the ways they get around that, of course, is it's a very big battery that they put in the car, and so unlike your phone, you don't fully discharge it every day. So most people who are experienced at driving electric cars, I have one as well. I'm at best I'm using 10 to 25% of the battery on an average day. So all of a sudden, that cell phone battery that lasted 3 years, just to sort of make a comparison there, if you were only discharging it a quarter during the day, it would last out 12 years, because you'd have 4 times that sort of lifetime of battery. So that's one of the way the auto industry gets around it, is by having these large batteries that you carry around and you don't use most days, but you need them for a weekend, maybe when you go for a long trip. As a result, you get quite a bit of lifetime out of these batteries.
And I mean, obviously, a lot of people here in Europe are following the Tesla story and the Tesla share price, and it remains consistently one of the really popular stocks amongst investors. Elon Musk flagged up his battery day as something where he was going to be making a lot of big announcements about the battery technology Tesla has, and there was speculation that they would be close to this fabled million-mile battery. What's your take on that, and where the auto industry is with that level of technology at the moment?
Well, specifically maybe to the million mile battery, because there's a lot to unpack from Tesla Battery Day. But and actually, they didn't bring up the sort of the million mile battery, ironically, at the Battery Day. The focus there is really if you can make the underlying cathode materials and the chemistry within the battery just more durable, so you don't see as much degradation as you mentioned in your cell phone. So what you're trying to do is reduce that degradation, so that instead of lasting 1,000 cycles, it lasts 4,000 cycles. For your phone, again, like I say, that would make it last 12 years of the battery as opposed to 3. And that's really the aim of what the Tesla researcher at Dalhousie University showed last year, is if you use the best of everything, we can attain batteries that last that long. Now, the issue is that the batteries that were described in this research are not yet commercially viable, because the sort of the input materials are expensive and hard to make, and that all of that needs to get resolved. But if you can make them last 4,000 cycles, then yeah, it's not that hard to get to a battery and something that'll last well beyond a decade, if not two. So, but for certainly for if you're going to drive the car more aggressively, much longer range, like a taxi might be using on a day-to-day basis, or if you need to charge it more aggressively, or if you need to try and shrink the size of the battery to reduce cost, then the durability of the battery becomes more and more important when you reach when you reach these kind of aggressive use cases. And so, really, the concept of the million-mile battery is really its durability. And that durability is what affords these, the more extreme use cases, like I just mentioned. And that's extremely important. So part of what we do at Nano One, we're very much focused on durability. We have 3 different sort of chemistries that we're working on. Lithium iron phosphate, which is traditionally the longest lasting of all the battery, which is the most durable, the safest, the cheapest. And it really has been LFP has been kind of a million-mile battery for quite some time. The challenge is that it's never really had the energy density to drive much beyond about 200 kilometers per charge in the average car. We're seeing some changes to that, and we can get into that a little bit later. But the key one that Tesla talked about was the one that has nickel, manganese, and cobalt in it, or nickel, cobalt, and aluminum, depending on the type of battery, and typically that lasts like your cell phone, kind of in the 1,000 cycle range, 3 years of charging, full charge and discharge every day. So we've developed a way to sort of coat the crystals, the individual grains of powder, so that they just don't fall apart in the battery as quickly. And we had some results come out in late June, which we published in a news release, and showing a 4 times increase to the durability of the material by applying these specialized coatings, and that's a key part of one of our innovations, all in the drive to make these more durable batteries for things like million miles or faster charging or cheaper batteries.
And it's more than just. I mean, the other thing to emphasize, obviously, there's a lot of focus on vehicle batteries, and I know you're working on not just cars but buses as well, with partners who are in the sort of public transport space as well. But this technology has applicability with a range of different devices and applications where people are using batteries and are looking for more efficiency, particularly in a world where we want to use more clean electricity and try and somehow manage our energy consumption better.
Yeah, you're absolutely right. And actually, your audience, certainly in the UK and in Europe, I think is traditionally more up to speed on that than almost anywhere else in the world. And I think sort of the renewable energy, whether it's wind, solar, and other types of energy storage, and the key there is anyone who's going to invest in a large battery pack to store energy, during the day when it's windy or sunny, to be deployed at night, needs a battery, first of all, that is going to get fully used. So it's going to get fully charged and discharged on a day-to-day basis. And it needs to last 10, 20 years, because the utilities that are putting money into this, they want as high total cost of ownership as possible. They'll size the battery for the daily load. What they don't want is a quarter of the battery unused every day, because it's a waste of money. They want that battery heavily utilized, and they need to last as long as possible. And so durability plays very, very heavily into that. And whether that's, let's say, lithium iron phosphate, which is a natural contender for that, or if there are sort of more energy dense applications needed, maybe these coated nanocrystals for NMC will make sense as when you can get them up to that kind of 4,000 cycle range. That's how these guys think. I think anyone in the industrial space is going to be thinking it very differently than the average consumer driving their car. I mean, most of us, we drive our car. We don't drive it very far, but we want to have enough range in the thing to take it out for a long weekend. And that's not how you think about buses and taxis, nor storage of energy on the grid. It's all about total cost of ownership. What is that battery going to cost you over its full lifetime? How much charge are you going to get out of that battery over its full lifetime, and have it fully optimized?
But you've obviously recently announced a breakthrough in longevity for a cobalt-free high voltage battery, haven't you? Just basically that was earlier on this week when Stephen Campbell, or I think it's your chief technology officer, said that you guys had made a new breakthrough in this area.
Yeah, so I can kind of unpack that a little bit for you. Maybe very briefly. So it's a cobalt-free cathode material, and it's comprised of mostly of manganese, nickel, and lithium. And those are the three main components in the battery. So obviously, cobalt-free is very important because it reduces the supply chain risk related to cobalt, given that it's largely sourced out of one place in the world, in the Congo. And the other dominant component is manganese, which is relatively inexpensive. So it's an inexpensive material going into a battery. It's unique in the cathode space because it actually operates at 4.7 volts. For your audience, just to give that some context, of course, your typical, a AA, AAA battery operates at 1.5 volts. Most cell phone batteries operate somewhere around 3.2 volts, and most electric vehicle batteries operate between 3.5 and 4.2 volts. So this battery is operating a full volt higher than the nominal electric vehicle voltage in a battery. So the increased voltage gives you higher efficiencies and less heat building up the battery, so it helps in the thermal management side of things, and it also gives you more power. Power being how quickly you can get the energy in and out of the battery. So that relates to charge, and it relates to acceleration and things like that. So those are the kind of benefits of this. However, the drawback has always been, as you bump up the voltage to well over 4 volts into that 4.7 range, typically in a battery, that causes all kinds of havoc with the electrolytes and the materials. So you get manganese dissolving into the electrolyte, and you get the electrolyte producing oxygen and gassing. And so the battery puffs up. And if it puffs up, it's going to do it almost immediately. And then the battery lasts 2 or 3 cycles. And if manganese starts dissolving and fouling up the other electrodes and coating places where it shouldn't go, the battery might last 40, 50 cycles. So this kind of configuration we're talking about has really traditionally, not just traditionally, this is kind of a known thing. They only really last 40, 50 cycles at best, sometimes only a couple if you've got gassing. So it's really, we found a way with our coated single crystal to prevent the manganese from dissolving. And by pairing it with the right electrolyte, we found a way to eliminate or diminish the gassing to the point where we were getting 1,000 cycles out of it. So it's a pretty remarkable achievement for us to come up with the right combination of electrolyte and cathode material to make this 4.7 volt battery give it some commercial viability, because it really hasn't had it till now.
Mm-hmm.
So that unpacks the whole part of the story. I'm sure that kind of leads to a bunch of questions. So I'll let you ask away.
Well, the interesting thing for me, I mean, we look at mining companies, and the whole issue of cobalt in batteries is going to be an issue. I mean, you can see that it's almost, you think about Saudi Arabia with being one of the biggest producers of oil. At the same time, oil is not concentrated in Saudi Arabia to the degree that cobalt is concentrated in the Congo, which is not the most stable place at the best of times. This has got to be an area for further development for you guys, because if you can come up with a solution that means that the batteries don't require cobalt or less cobalt, that's got to be a winner for the big manufacturers.
For sure. Look, the Volkswagens and the big car manufacturers, they don't want to commit to a battery platform that requires a significant amount of cobalt because the future is uncertain. I mean, even notwithstanding the child labor and ethical issues of the cobalt mining in Congo, you've got an unstable government that every 4 years, closes a few mines for its political gains and then opens them back up. And the big auto manufacturers can't have that risk in their pipeline. And so they're looking to thrift cobalt out as much as possible. It's just simply there's too much uncertainty there. So this material, the high voltage spin out, we originally designed it and its kind of coating around each one of the crystals. We designed it for use in solid state batteries. And the coating was designed to actually interface with a solid electrolyte in a battery. It's a very stable material. I mean, as you push lithium in and out, it doesn't contract and expand like other cathode materials. So it's mechanically very stable, which makes it ideally suited to a solid electrolyte, because when you got two solids together, you don't want one expanding at a higher rate than the other one, because everything breaks apart. And so that's always been a really strong candidate. But solid state batteries are the timeline on the commercialization of those batteries is out there. It's a next generation battery. What we've shown with this recent result is a battery. We've taken our high voltage spinel with or as we call it, the lithium nickel manganese battery. We've taken and put it in a conventional battery with a conventional light, and it shows that there is very much a near term in battery development that could use this material using relatively well-known and well-understood sort of configurations of the battery. The industry doesn't have to take nearly as big a leap as they might have to do with solid state. So that's a really important thing to understand about the news release we had earlier this week.
And that presumably is a technology that automakers and other parties will be able to evaluate then make a decision on. I mean, that's presumably something you can go out to the market with and discuss with companies that might be interested in that.
Yeah, listen, we're already out evaluating this material in both solid and liquid state batteries. So we've got some kind of near term and longer term sort of configurations there that might work, and they're with some of the largest battery and electric vehicle companies in the world. So yeah, there's a lot of interest in this, and of course, our ability to sort of prove this on our own, independently of the arrangements we have with these other guys, is generates a ton of interest, and we're hoping a bit of deal tension as well, because we're moving this thing along in parallel to what we're also doing in our relationship. So it's a big part of our strategy is to we're making sure that we show considerable sort of movement on our end of things as well. So yeah, it is we believe it'll become a very important battery in the future.
I mean, we've kind of dwelt a little bit on partners, and I know this is something we come across in our last podcast. You obviously can't. There are some partners you can talk about. There are some partners you can't talk about, and there's obviously a lot of speculation about who you're working with, and you did announce a partnership deal with a undisclosed Asian partner who remains unnamed earlier in the year. Are you able to provide any further update on that?
Yeah, maybe just to give your readers, your listeners, some context here. So we're working probably with about 20 different sort of multinational companies, and these are whether they're miners, cathode producers, battery producers, or electric vehicle kind of OEMs. And we've announced 4 of them. 3 of them we've disclosed the name, and the 4th one, which you just mentioned, the name remains undisclosed. The most notable name is Volkswagen, of course. This Asian producer that we're talking about here is based in Asia, Chinese, and I think it's important to understand that. So, and the other big sort of powerhouses, national powerhouses in the battery space in Asia are in Japan, Korea, Taiwan, and we're starting to see some big battery sort of initiatives emerge also in Southeast Asia as well. But to give you some color on these guys, they're a very large materials company involved in mining, trading, specialized materials, the whole works, and they supply the automotive industry in Asia, some of the largest car companies in the world, a whole range of different materials, and cathode has been one of them traditionally for them, and they're looking for ways to differentiate what they are supplying to their customers, and they're trying to create sort of a long-term relationships and long-term supply deals on cathode materials. So what we're working with them is a next generation material, and I can't tell you which one, but it is a next generation material, and it will be going into a kind of a near term or next generation type of lithium-ion battery. So what I described before, like a high voltage battery or a solid state battery. Or a longer lasting, let's say, single crystal battery. Those are all sort of possibilities of where this will go. And the exciting thing about this is it's not just a license deal. There's a strong possibility here of some kind of a joint venture, assuming that the technology plays out and the demand for the material is there. And these are one of the sort of best groups kind of we've ever worked with. We're very well aligned strategically, and I think we've built a really good set of business targets as well. We're very excited about this group.
Obviously, the partnerships are really critical for Nano One as a business, and working with across a number of different areas is a big part of what you do. Are you able to, I know you're not allowed to talk about any other partners, but are you able to shed any further light on the sort of work that you're doing with partners without giving any names away?
Yeah, no, absolutely. I think we certainly in the past we've talked about a variety of materials that we're working on, like lithium iron phosphate or the high nickel NMC materials, or low cobalt NMC materials is the other way to look at it. Plus this one we just spent a little while talking about the cobalt free materials. Those are various initiatives. Each one of those materials and each one of those cathodes and batteries made from those cathodes have different properties. Some of them are better, some of them are faster charging. lower cost. Some of them have much higher energy density, but are not as durable. And so each one of them has strengths and weaknesses, and that gives them different applications in different part of the market. At this point, we feel those are the three most strategically important materials, so we continue to concentrate on them. But I think the more general theme here is really exciting for us. Is on the performance side. It's about us being able to make these coated single crystal materials that last longer. They just reduce the side reactions in the battery. And in case of the cobalt-free material, instead of lasting 2 cycles, we're showing it lasting 1,000 cycles. It's a remarkable improvement. And in the case of lithium iron phosphate, it traditionally has always had a sort of coated nanocrystal on it. We've just found a way to make it cheaper and address some of the very aggressive sort of price pressures on that. So those are the kind of the material families. But I think your audience here is going to really kind of appreciate the cost and supply chain side of thing we're doing. So this is all related to the ESG, environmental sustainability narrative that has emerged really strongly this year, and of course, and very much so since the June-July timeframe, when we've just seen such a massive rise in clean tech investment, and that's resulted in a whole bunch of emerging opportunities. So that's just a bit of a kind of a backdrop to this, but our technology is as a process. It's a chemical process. We have a way of assembling lithium, nickel, manganese, and cobalt into a cathode material. Where we differ from the rest of the industry is we do not use nickel, manganese, and cobalt in the form of a sulfate. We use it in other forms. Let's say in the form of a carbonate or a hydroxide, or we're even starting to look at how we will use just a straight metal as an input material. And what that does is it gets rid of the sulfate waste stream. So you don't have sulfate. You don't want sulfate in your battery. But right now, the way the industry works is the refiners make nickel sulfate, for instance, and they ship that off to the cathode guys. It's 20% nickel and the 80% sulfate and water. And that gets shipped off to the cathode guys. And the first thing they do is they mix it with a stream of cobalt sulfate and manganese sulfate, and they precipitate it out, all of the sulfate. The sulfate goes to waste, and so does the water. And they create a nickel, manganese, cobalt hydroxide or carbonate from it. And so this sulfate is being worked up at great cost at the refiner. It's just an amazing amount of inefficiency and waste, and that is how the supply chain works today. I think that's a really fundamental thing to sort of understand here. And we're getting some considerable traction right now, both with the miners and with the auto guys, and that's because the auto guys want to see it cleaned up, and the miners want to find a way to clean up the supply chain as well. So there's this tremendous kind of initiative really to push that forward. We use non-sulfate forms, so we solve this kind of supply chain problem. It helps consolidate the supply chain by getting rid of, let's say, the sulfating step. It reduces cost. The sulfating step is actually quite expensive. And then lastly, and I think your listeners will be kind of aware of this part of it as well, is that we use our process is what we call the single pot process, a one pot process, and we add lithium in at the same time as the nickel, manganese, and cobalt, and that allows us to use lithium carbonate as opposed to lithium hydroxide. Lithium hydroxide is more corrosive, it's more expensive, it's harder to handle, it's very susceptible to water and moisture. Lithium carbonate is completely the opposite. It's cheaper, easier to use, easier to handle. By using alternative sources of lithium, nickel, manganese, cobalt, iron, whatever the feedstocks are, we're finding ways to actually change the supply chain, work with the miners, work with the auto companies to force the supply chain to clean itself up and address these glaring problems with environmental sustainability. So that's I think that's a big part of the emerging narrative that we have coming right now, and we launched a program to move this forward. We've been working on it for a little while, but we brought on an ex-Vale VP named Bob Morris here in Canada to help us sort of build the narrative around that, and we're kind of off to the races with it. It's a very exciting opportunity for us.
And this is and just to sort of summarize for people so they fully understand the importance of this. If you're in a situation where if people are manufacturing these batteries as a means to help to save the environment and provide an overall cleaner environment, it's a little bit contradictory if the actual process involved in manufacturing these batteries is itself potentially often it's expensive to make it happen in an environmentally friendly way, but also some of the processes that have been involved historically are not as environmentally friendly.
Absolutely, and look, it's anytime you get a supply chain maturing, these kinds of things have to happen, and the technology is a way to resolve them. You need to bring technology to bear on the manufacturing, and you've got to get everyone to adopt the new changes in technology, and that's certainly our cross to bear. We've got a lot of work to do on that front, but it's a very exciting time because we feel we're sitting right at the center of the thing with some really important intellectual property that can enable us to change the way the world makes cathode materials and battery materials.
Last time you were on the podcast, that wasn't something that you were discussing. So this obviously been a more recent development for Nano One, and one that you obviously is an important strategic direction for the company. What was it that prompted you to look at this more closely?
Well, it's actually it's always been part of our system, so it doesn't really change our process. And it is. I think it's been a harder story to tell until this year. We started to see the whole environmental sort of and the whole ESG narrative really emerging earlier in the year, back in January, February timeframe, and then COVID took a chunk out of it for a while, and it's all sort of come back in June, July timeframe. A couple things, so we already had all the work underway. We're already kind of, like I say, working with the miners and the EV companies on trying to figure out how the supply chain could look if it was using our technology. And so that's all been kind of happening in the background. And what really tipped it for us was with Tesla back in kind of July timeframe. It was Elon Musk going, he says, we need to clean up nickel. And that narrative took brought it all to the forefront. And so we scrambled at that point and said, okay, well, let's launch this. Let's launch our initiative publicly because it's out there. Tesla says they want to see it changed, and we have a technology that can kind of address it. And look, I'm not saying we're working with Tesla on this. I'm just saying that they put the narrative on the table, and it played really well into our book. So a couple of weeks later, we came to the market with an announcement about what we were doing, and this guy Bob Morris that we hired to help us sort of build the strategy around that and to build a relationship with the miners and all the people that have to be involved with it. And then 3 weeks later, after we made this announcement, Tesla has their battery day, and of course they said very clearly, hey, we need to be working directly from the metals going to the cathode material, and it couldn't have played better into our book, and very much provides a level of it corroborates, our story and our narrative, and so we continue to work with our partners on very much the same thing.
It's certainly been from a share price point of view, it's been a good year for Nano One. I mean, since we've been covering you, the share price has done extremely well. At the time of this recording, it's not far off $3 Canadian. And you recently announced a new equity offering, which you've gone to the market with just this week. Can you give us a little bit more detail of that and what your plans are in terms of the money you're raising from that?
Yeah, listen, as your listeners will know, we raised money in February. We raised $11 million, and then brought in another $3 million from a local government here, and have had a bunch of warrants come in as well. So our treasury is it looks very good right now. But really, what's changed since February is this huge ESG narrative, and it's driving a massive amount of clean tech investment. And with that comes a whole bunch of emerging opportunities that we didn't really see. They weren't really kind of the sightlines on them weren't as obvious earlier in the year. But as of June, July, August timeframe, it's really there. So this whole thing about simplifying the supply chain that I just talked to you about, the fact that we're able to show this no cobalt or this cobalt free battery, surviving at high voltages is a really big play as well. So we've seen BYD in China come out with this new Blade LFP battery, which is it's a battery to frame architecture like Tesla talked about, but using LFP as a material, and they're able to drive up the energy density of the pack to the point where they think they can get a 400, 500, 600 kilometer range car. But in fact, they're already selling them. They're years ahead of Tesla in terms of bringing this whole idea of cell to frame to market. And all of these things are really the backdrop to the financing. And so timing is really good on that front. And of course, the capital that we're raising here is coming at 2.5 times the raise we did in February. So and it's going to be we've got long only funds coming into our Nano One, which is something that we have been working hard on over the last few years. So that's a big part of it. And they of course have a long EV ESG sort of investment thematic that comes with them. That's that's just what the company needs. So look, it's opportunistic. It's about its timing, and we can do it in a relatively non-dilutive way. So that's really the backdrop and why we decided to pull the trigger right now.
The timing certainly seemed to be good for that, because there are a lot of funds out there and a lot of family offices and other investors who are looking for this kind of pure ESG play, and you seem to be extremely well positioned from that perspective.
Yes.
Thank you very much indeed, Dan, for joining us and for keeping us up to date on what's going on with Nano One. If you are interested in following the company, we continue to cover Nano One on a regular basis, so make sure you check out www.thearmchairtrader.com for further updates. Certainly a story that we will be following closely. Thanks very much indeed, Dan.
Much appreciated, and thank you for once again the opportunity to update your audience.